Another day, another damn dollar. Another coupon in the mailbox. Another bus, another train track. Another broken stained mattress where my brain rots. Yeah, and I'll be leaving like a alumni. You could taste the gasoline and got my tongue tied. Rolling through the jungle with my punks white. We waste time and we run wild. I watch the colors and the lights as they fade. In the comfort of shade, there's no burn in my heart. You stay in front and all around in my face. Tricky games that you play, wishing we were apart. Yeah. Hey, don't need no money and no time. I need something that'll get you out my eyes. Take off my jacket and my tie. I need something that'll get you up my mind. Another job, another heartache. Another sadness in a life track. A couple years, a couple kids, a couple dad hats. Yeah, I don't wanna live like this. Where were you when we needed you the most? I know exactly what you think, so I push till I see you no more. I watch the colors and the lights as they fade. Comfort of shade, but there's no burn in my heart. Yeah, you stay in front and all around in my face. Tricky games that you play, wishing we were apart. Hey, don't need no money and no time. I need something that'll get you out my eyes. Take off my jacket and my tie. I need something that'll get you up my mind. Somebody to love me. Around the time that the cacti wakes up in the night, I'll open the ties. I'll be waiting by the rocks on top of the hill with a glow stick, map of the sky. Oh, I've got a surprise. balcony with dad. I was just a wide-eyed kitty with questions asked. Who made skin and painted my eyelids? Inside of my iris, space my thigh hips. Amazing scientists could have solved and made the math of it. Exact course giving you proof. Never ask human first. Look up at the universe speaking to you. Oh, word. Ever since the day you don't pray, but study the pattern of bird flight. The number of female bees in the beehive divided by the males equates like 1.61803. Now see, I'm laying out on the ground that we have been designed, but we won't be defined. And I will not decline. When all of you look at money, you never could see time. This is just a letter for God and all the time space beings that are littered abroad. I don't want to see no tunnel of light. More so just to run up in a summary walk. No questions asked in a class of church. Many left unanswered past the work. I want to know why earth filled greed and hate. Thrust me out there with the soul and waste to let go. Down in the ash, do you sit back and roll the dice, or do you blame by the rules, give a fuck about us and kick your feet back onto the sky? Oh, please tell me why. Please tell me why. I was born a misfit, could never understand what a world sadistic. Kid the dipshit who would take the piss of anybody in a fundamental click religion. Now just let them feel safe cause they wanna be held to blame the devil for their own mistakes. Why bother? I know the planets around the sun, we are not of this earth. All we think about economy, work, they're not sums. Summed up, half of the poverty in the slum is some real design. God's son, how we end up with a mass disease. So many loved ones pass disease without one. How come? Real sums inside of an insect, side of a man's face. A body I try to inspect. Number 1.618. Yeah, I'm trying to understand why the fuck we great. This is just a letter for God and all the time space beings that are littered abroad. I don't want to see no tunnel of light. More so just to run up in a summary walk. No questions asked in a class of church. Many left unanswered past the work. I want to know why earth filled greed and hate. Thrust me out there with the soul and waste to let go.
Hello. Good afternoon. What's happening? Hopefully you guys like the title. Kind of running out of ideas here. So I just threw something together. Obviously not a whole lot to talk about. We kind of had a long stream yesterday, 2 hours. And we pretty much talked about everything. But I'm here, you know? Just stopping by. Let's go ahead and switch over to my face. I think there's something wrong with my camera. Give me 1 second. Let me try to fix it on this side. It looks laggy. Let me see if I can do something about that. Maybe I don't have like hardware acceleration or something turned on this. I don't think it's gonna make much of a difference. But yeah, I don't know why it's like that. It's weird. Yeah, I guess I'll fix that later. It's not a big deal. Let's go ahead and pop out the chat here so I can see you guys. I got the music going. Renew my subscription. Nature's Game, what's going on, man? Rick, nice, just finishing up your last stream and you start a new one. Perfect timing. Perfect timing. And I sent you the name of the song through that little link I sent. It's Be the Nomad. He's been one of my favorite people for a long time. Since I was probably about 17, I was listening to him. He's got some good songs. Johnny, back-to-back Kite streams? Pinch me, I'm dreaming. You're always dreaming when you're around me. We missed you this morning. It was just me, Isaiah, and Monk. Wendell, happy, aloha. Saturday evening, everyone. Any thoughts on going down to 40K? So from a trader perspective and a personal perspective, I don't necessarily think so. Now, my trader perspective would be flipped if we happen to get back below 53,670. All right. So at the moment, I kind of have my chart marked out here. Oh, let me make sure everything's in view. That would help. Okay, cool. And let me turn down the music just a little bit. It's a little bit loud on my side even. So I just don't want it to interfere. But, you know, for all the people that are going to go into the comments and be like, he's crazy again, what's happening? We're just talking about support and resistance and probability. If such and such was to happen, what would be the likelihood? All right. When we were all the way back here, when I talked about us going back down to 49K, all right, the only support that we had was at 60,150. All right. So for me, it was, I can pretty fairly say, if we don't break the all-time high and hold above it, we're going back down to retest significant levels. And that significant level was this previous resistance right here at 49,395. So that's where I got that number from. It doesn't come out of thin air. I'm not just calling these numbers just to, you know, be an asshole. But to answer your question, Wendell, if we got back below 53,630, all right, that now opens us up to retesting 49K, 49,400. Now, at this moment in time, the only way that I see us going back down to 40K is if we get back down below 49,400. If we break back below that resistance, all right, it doesn't necessarily mean that we will go here, but the likelihood of a retest of that region would be significantly high, more likely than not. All right. So if that was to happen, all right, price action is going to try to retest 38,480. Whether or not it gets all the way there, that's a different story. And usually we can see the developing price action and see if it wants to stop beforehand. All right, there's always a chance that it just takes a dip, shoots right back up. All right, but more often than not, it doesn't do that. All right, doesn't mean that it can't though. All right, so at this moment in time, with the large ABC structure being extremely bullish, and the farther and farther away that we get away from the halvening, the more that has an effect. So to me, we're entering the territory where there's not much that can stop upwards price action. you know, all the way back here when the halvening was fresh, it's expected to see a retest. It happens every time, and I don't get why people don't understand that. All right, but now that we're significantly past that point, and we have, I meant to mark it out. Now that we have this large A to a B to a C, all right, it becomes a pretty significant if this and that statement. If we are above 53,595, we are bullish, and we should not expect anything further down. All right. Now, in terms of medium time frame, there definitely could be a retest. I don't think it's going to be significant, but it, you know, time will tell. All right. On the smaller time frame, we do have, now I'll mark this out in a different color, A to B to C. What would be an easy color to see? Teal? I guess that works. All right. So it's not confirmed yet. All right. You can see right here, 63,020. It's roughly around that range, depending on which chart you're playing on. It can be lesser or higher. All right. But for all intents and purposes, it is 63,000, pretty much flat. All right. If we come back down below that level, that triggers an ABC, showing that price action tried to push to the upside, but we just don't have any gas in the tank. So therefore, we probably would want to go back down and retest 56K, all right, to about 54K. All right. That's what we're looking at in terms of medium, but macro-wise, still bullish. All right. So if you have a position from 53,630, I really think the most that you should be doing right now is taking a hedge position against that trade. And then, you know, if you wanted to kind of add on top of it, you know, a lesser position that would be taking profit at 54K if we ever saw it. Or, you know, you could target 55, 56. No issue with that. Now you can see with these dotted lines here, I marked out the previous significant B and you know, top of the A and bottom of the B. Those are significant levels for price action to kind of push through. If we can get past 54,145, it's pretty free and clear to come back up to the top here. We just would have a little bit of resistance here and here, but I don't think it's going to be much of an issue. You know, 64K is the level to break here. IDK about 40K, but if we break down and close some dailies below 48.9, exactly. You get it. All right. It's probability based and support and resistance from that point on. And you're exactly right. If we break down, you know, below the 49, then we definitely would be targeting 38. Hey Kite, hope everything is great. Been away for too long and hodling, but remember we had a class when you made your Discord group after that MC group indicator you were dabbling on some. Well, welcome back, man. A lot has changed. All right, we practically don't even mention Market Cipher unless someone brings it up. For some reason today, someone invited me to the Market Cipher Discord. I don't know if it's completely private now or if I'm banned, but when I joined it, there was no channels, or it said that the channels were hidden. So maybe I was personally banned. Who knows? Yeah. Nowadays we go purely based off of market structure. We've been doing so for like the last 2 years, and it's had significant gains, and it's way less stressful. Way less stressful. Huge waves crossing each other. I swear to you that you told me BTC was going to go to 60K. This was before the 19K first breakout. Amazing. I never forget. I mean, it's not like I'm Nostradamus. It's really not. It's you know, we made a simplistic thing, and it might be simple, but it's the best thing out there. You know, during the bear market, we went ahead and we marked out the significant local lows that contributed to the uptrend. And from there, you know, once we hit a significant low and we have a large ABC structure that confirms to the upside, I pretty much take that as the bottom. You know, there's not much that can stop it from that point on. So, I mean, it's pretty easy to say, you know, once we have that ABC bottom, we're pretty much on our way back up to where we started. It's just how it goes. Now, my spooky number is $176,000. That's kind of my prediction for the top of the bull market. And once again, that's also very simplistic of how I got that number. You know, if we go back to like BTC USD Bitstamp has the most price history here. You know, if we look at the previous 1.618s from the bear markets. All right. Am I on the right thing here? Good levels based on log scale. Oh, I'm doing this wrong. There we go. I mean, this one was calling for 8,673. If we do the previous market here, this one was calling for 62,410. Obviously, we hit 69 and then came back down. So if we kind of just do the same thing over here, 172,000. Where was I getting 176 from? Oh, I'm overestimating a little bit, just like how right here, we went a little bit above the 1.618. So, I'm just kind of giving a little bit of extra wiggle room. So that way I'm more on the money and I can claim bragging rights. But yeah, I mean, I look on Reddit and everybody is kind of talking about 300K. And to me, I think 172, 176, 180. I think that's a little bit more on the money, especially just considering how, Bitcoin works. Yeah. Thoughts on the Fed cutting rates? No, I don't have any thoughts. Like, to me, I just that's none of that has ever had a bearing on any decisions that I make regarding my trades, anything like that. And I am not of the ultra wealthy where interest rate cuts would affect anything that I'm doing. So to me, it's just noise. People it's almost like they have a watch party to find out what's going to happen. And to me, I just don't have time for that. Thoughts on... Oh, wait. I'm just reading the same message. Can you look at the DXY? Yeah. So the DXY on the super macro time frame is currently very bearish. All right. Now, it does have some makings of another try to the upside, but not without a little bit of retest to the downside. So, I mean, if we're looking at this from a macro level, we have an A to a B to a C. All right. So if price action is below 104, we are macro bearish on the dollar. Now, we can easily just go ahead and mark out what would price action most likely retest. Well, the easy answer would be this local low here at 89. So considering how slow the DXY moves, just like this uptrend, for example, took... Is that correct? I guess it is, yeah. I mean, this took 1,700 days just for that uptrend. So if the DXY is in a macro bearish position with a retest all the way down to here, that could take 2-3 years to reach that low before coming back up. So traditionally, when we talk about the DXY, it is basically an inverse indicator of assets. You know, if the dollar is doing well, people are more incentivized to keep their dollars. If the dollar is doing bad, they're more incentivized to go stick it into stocks and stuff that can outperform it. So if it's going to take 2 to 3 years for the dollar to kind of hit a low and start making its way back up, if it makes its way back up, well, then we can assume that Bitcoin is going to be on the up. So 2 to 3 years, that sounds good to me. You know, typically these bull markets, they take about 2 years to fully work themselves out before we start going back down to the downside. Now, what I was talking about before is on the what you would call medium time frame for the Dixie, we do have an A to a B to a C position, and that is off of this level here at 99. So if we happen to put in a, you know, we can kind of assume that price action definitely wants to go back down to 99 and retest that. If we do happen to put in a slightly lower low and come back above it, that could change things quite a bit. Then we might want to come back up a little bit, but overall, this macro structure still stands going forward. He is currently under the desk, James. He's not very happy. I had to douse him in flea medicine because I found a couple of them on him, and he's been itching. It's summertime, so they're rampant. You know, we got 3 cats now, so they're constantly tracking in pests. But yeah, that's the Dixie for you. Macro wise, we're bearish, and that's a good thing for Bitcoin. And price actions real stalled out right here, right? Yeah, as it currently stands, my going position on derivatives is I am long from here. Now, considering the fact that the portfolio is quite new, I am trying out something slightly different to my strategy to see if it makes sense from like a math perspective. And I'll share that with you in 1 second. So these are my current trade setups. Now the long position, that's, you know, ongoing. All right, I'm holding this long until there is a significant downwards ABC that allows me to compound it. Now, that is traditionally what I do, and that is what I expect to do in the future for all my accounts. But on this challenge portfolio, I shouldn't even really call it a challenge portfolio because I'm not trying to get to anything. It's just whenever there is price action that is exciting, I do like to, you know, partake in it and see what's possible. Because that's the whole thing. Like, you know, I've said it a million times, but, you know, when you look at other financial people, typically they're trading with their $1 million account, you know, 50x leverage on $40,000. And it's kind of hard to relate to that. So that's why I like the smaller accounts. And it also like gives me a, what's the word for it? A pedestal? It allows me to cast stones. All right. You know, where people, you know, have the opinion that you can only succeed if you have, you know, inheritance that you can throw at the market. But I like to prove that you can start off with pretty much anything, and as long as you make the correct moves and you don't get impatient and you have some proper math behind it, you can pretty much do anything. So that's why I like the smaller accounts. It allows me to scream at people because I've seen it for myself. It's not like I'm talking off my high horse. But these are my current trade setups. All right, so I did go long at 57,980, but I have already taken profit on that long position. Now, this is not on my main portfolio. This is on my derivatives small account. But what I've done is I'm still open to the short position, but I closed the long position and reopened it here. All right, so I was up about $50, something like that, and then I reopened the position here. Now, I am risking being stopped out of that position if we happen to go back down to the downside, but it comes down to a simplistic, if this ABC does end up working out, well, then I have the short position, and the short position more than likely is going to take me back down to, at minimum, 57,980, but more than likely somewhere down here in this region. So there will be another opportunity to go ahead and collect that long again. So I'm trying to see if taking profit on the long position a little bit sooner than I usually would makes sense, because traditionally what would have to happen in my trading strategy in order for me to take profit on this position here, A to a B to a C, would be price action would have to come back up, like this, and then we would have to put in a new A to a B to a C. So I would exit the long position from the first one, and I would enter the second one with the compounded profits to hopefully continue the trend. And you don't have to wait for this pattern to confirm to take profits on the first long. All right. This is the tried and true method. This is the one that I've succeeded the most with, but just for the sake of things and seeing if there is any extra profit to be made, I'm trying something different. But like I was saying, once this ABC is fully formed, aka the C goes below the A, all right, that's all I need. I'm taking profit. As soon as I see an A to a B, the stop loss from the original long trade now goes here. All right, because as soon as this pattern now becomes a reality, all right, if the market is going to stay bullish, it's going to be from that point. So if it comes back above, I re-enter the trade and I work with the momentum. This is not I remember you used to take profits at the 0.618. No, I'm not doing that. It's more based off of the real levels. So with this short position, if we do get a opposing ABC long that confirms, such as like this, all right, and it confirms, then I'll take profit here. But if not, I kind of go for the mean value between the local lows that are more likely to be retested. So in this case, that would be 56,365 and 53,610. So if we kind of got between the two of those, I would instantly take profit. Otherwise, it would have to be based off of the actual market structure itself, whether or not I get out of that trade. Now, if we had a like a more macro ABC structure, you know, it would have to really, you know, start cutting up here. So, you know, we would have to have a large A to a large B to a large C. That, if it was that type of structure, that large, that would be a hedge trade that I would most definitely be holding, you know, regardless if it works out or not, until we got a, you know, proportionate size ABC, or, you know, we kind of get down to like the 44K level. You know, that's the type of ABC that would say, okay, we probably are going to go to 44K. Other than that, it goes basically, you know, strictly based off of support and resistance, because we could keep doing what we're doing, where it's, you know, down, up, down, up, down, up, down, up. And, you know, we could probably, you know, if that happens to do that, that's cool too. But the structure itself isn't screaming to me super bear. So I can't make that judgment to say that we're going to go all the way down to 38,000. That just doesn't make sense. Demo, what's going on, man? How you doing? Guys, again, ready to short. I trust this man on shorting. Like I said, it's not Nostradamus calls. All right, it's strictly based off of support and resistance, and what is likely. And, you know, when we were all the way back here at these levels, back in March, to me, there was little to no support. You know, the only support that we had was at 60,000. So it's pretty easy for me to say, all right, if we can't break this macro resistance, well, we need to go retest some other macro levels. And that just so happened to be 49K. People don't want to hear that. I mean, we go through this. I mean, I don't know how many times we've gone through this. I remember very, very vividly. It's almost like deja vu at this point. And I even had the same type of messages. People calling me stupid, you know, pretty much berating me for being so bearish. And then they come back and they apologize. So when we were in this last bull market, and maybe some of you guys remember this. All right, when we were in this last bull market, all right, what did I do? Well, we were paying attention to ABCs towards the latter end of it, so we were calling out some of the tops. But more importantly, we were paying attention to local lows, all right, because we were assuming that the bear market was kind of underway or in the beginning stages. And we were looking at local lows to, you know, possibly find a support. So we mark out the local lows. Support, 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 support. You know, that one really didn't have much significance. You know, price action played off of it, but not in the way that we typically like to see. All right, so what ended up happening? All right, you know, just looking at these supports here. All right, so we had the first ABC, you know, the last ABC that we finally had a top at. We had an uptrend that ended in an ABC structure, ABC top here. So like, all right, well, the trend is going to continue to the downside. All right, so we go, okay, if we can't hold 50,700, then we're going to go back down to 44,660. All right, price action went below. We try to come back above it. You can see right there, we retested it. It became resistance. So then we moved down to 44,655. And at that same exact time, I was saying, all right, and it's not like it's anything special. This is what I'm trying to show you here. It's not Nostradamus. It's, are you paying attention with your eyeballs? That's all it is. All right. If we fail at this macro support level, the only other macro support level was down here at 29K. All right. Now, during this bull market, obviously people were more sensitive to, you know, a 30K movement. Now it seems like it happens all the time. But I said, if we cannot stay above 44,700, we are going to go to 29K. I probably didn't say we are going to. I probably said the market is going to want to retest 29K, and that is the probability that we will see. People didn't want to hear that, and they called me stupid, and the rest is history. And it's not anything special. It's paying attention to the levels on the macro and what makes sense. Now, did I think that it was going to happen in a couple candlesticks? No, but that's a bonus. So when we're over here, you know, this is the macro resistance. This is the big guy, the big dog. All right. When price action is struggling to break the largest macro resistance that we currently have, all right, and we have, you know, look at this chart here. All right, so when I called out 60,000, all right, that was being generous, because I like to give a little bit of hope to the bulls. But if you look at this chart, does that $60,000 local low look significant? You probably can't even see it. I got to zoom in for it. All right, it's right here. It's a blip on the map. All right, does that look significant at all? Not really. All right, so I'm looking for significant local highs and local lows. If I start at the very bottom here and I mark out the local lows, which are typically what price action likes to retest on downtrends, I should probably do it from the local low. That would probably make it easier to see what I'm seeing. So I'm starting the line at the local low. All right. So these are the support regions. This is where price action is the most likely to bounce if we see a significant downtrend. Now, because of the halvening, all right, we can say that previous resistance can become new support. All right, and we don't necessarily have to directly target local lows. When we're in a bear market, all right, I'm pretty much strictly looking at local lows. All right, those are price points where price action really had a strong hold, so they're more likely to have a significant impact. The previous resistances, not so much. All right, it's the same thing like when you're in an uptrend, you're fighting previous resistance. All right, and I'll show you an example of that in just a second. So these are your local lows, and then I'll mark this out in a different color. And these are your local highs. All right, so if we are struggling to break the most significant resistance in all of Bitcoin land, all right, price action is saying, okay, well, we need to go back and retest something to confirm that we're supposed to be at this level in the first place. And if we're supposed to be up here, then we probably could push higher. All right, that's the psychology behind all this. All right, so we go back down and we retest the previous resistance to confirm whether or not it could be a new support and give life back to the market and give us a hope of breaking through this resistance. All right, so that's where we got that number from. Now it's the same thing all over again. if we cannot hold 49,510, we probably will see, all right? It doesn't have to go all the way there, but that is what the market would like to retest. And if we break below 49,000, the probability will become 38,345. Hopefully that's clear and plain as day. It's not me being a bear. It's a simple if this then that. All right, and you can do it too. It's not something that you have to be super smart for. This is just using local highs and local lows. This isn't intuition based off of structure size, nothing like that. This is point. If not here, then here. If here, then there. Very simplistic. All right. So like I was saying before, if you're in an uptrend fighting against a previous downtrend, well, then you're primarily going to be retesting local highs, and the local lows no longer hold real significance. All right. They do, but not in the traditional way. So I'm looking at this downtrend here. Okay. Now, if we're assuming that price action wants to verse it, all right, we're going to be marking out the local highs. My monitor just went black. That was weird. We're going to be marking out the local highs from this downtrend. And I mean, I guess you could say that, but not so much. All right, these are the significant local highs of this downtrend. Now let's see how price action reacted to it. All right, we go up. We test it. We get rejected. All right, when we get rejected from a resistance, price action wants to retest below us in order to make sure that we should be at that price point. If we confirm that we should be at that price point, that probably means that we can push higher safely. All right, so then price action goes up. It breaks that resistance. All right, we retest the next one. We fail to break above it at first. We come back down to retest previous resistance here. All right, and confirm new support. We ended up confirming new support. All right, we get above 32,370. All right, our next resistance is at 48,595. So then price action comes up. It tests it. We fail to get above it the first time. We come back down to retest lower levels. This one, we had enough gas in the tank to not necessarily come all the way back down to 32K. That's what I'm saying. It's a probability. It's not set in stone. All right. So when I say, we potentially in the future, if things go the way that they might, all right, we probably would be retesting 38,475. That doesn't necessarily mean that we have to get all the way there. It's just what price, it's what the attempt would be. And most of the time, the attempts are pretty successful. So then price action moves up. And obviously at this point in time, there's a lot of hype in the market. People are very excited for a new bull market. So we do actually push past this quite a bit, but things die down. There's not enough gas in the tank, and we're hitting resistance. And now we have come back down to retest a previous resistance. And at the moment, so far so good. On the macro time frame, we have confirmed support. We have gotten a positive response from the last known macro resistance. And beyond that, in the in structure, all right, inside of this, we have gotten back above previous lows. That's also good. All right. So in order to really take off here, I do believe the market would want to build some sort of medium time frame reassurance before we really start taking off to the upside, because we would be fighting a potential macro ABC. So when we do take off, we need to get pretty free and clear of the $74,000 range pretty quickly in order for investors to have a lot of faith that this is going to go far. So on the smaller time frames, we're going to be building up support. making sure that this region is nice and tidy, and then we'll eventually have our rocket ship. Did someone say ass sets? Live fast, eat assets. Absolutely. What was your stop in percentage in your last long? 1%. Now, on like the larger spot portfolios, I do tend to use, 2-3%. Obviously, those are less risk to begin with, but it's nice to not have to worry about those accounts as much. Do you see the possibility to retest that last low on BTC? If you're referring to 49,500, at the current moment, no. We don't have, with the retest of the last known local high here and confirming support off of it, that gives a lot of bullishness to the market. And beyond that, getting back above this ABC structure here at 53,635 is very significant. If we were down here forming an ABC and kind of stuck underneath 53K, I probably would be leaning a little bit more bearish with the possibility of a break below 49. But with the macro confluence between these two things and this current short setup, not of a large caliber, I do think there's going to be a retest to the downside, just based off the current market structure. Now, I could be wrong, that's one of the reasons why I'm testing out what I'm testing. All right. If we do happen to continue to stay above 62,930, well, then we will continue to the upside. But if we do happen to come back below that, price action will most likely want to retest anywhere between 56,400 to 53,600. But I don't think it's going to exceed that. That's my personal opinion, and a little bit of my trader opinion. But from my trader perspective, I don't see anything macro bearish, really calling for anything past 49K. Even when we were over here, I wasn't necessarily calling past 49K. When we have downside price action, we do tend to have a little bit of an oversell. So, I did mention like 48,000, just a slight dip below this previous resistance, and then, for us to come back above it. But I never really saw 38K, but that's the thing. It's pretty cut and dry. I'll say it again for the people in the back. This is not me calling for 38,000. It's simply saying, if we do happen to go back down to 49,500 and we get below it and we struggle to get back above it, the market is going to want to go back down to 38K. Doesn't have to get all the way there, but it's going to try. What the stop in that? You're going to have to rephrase that. What the stop in that? Maybe not crypto related. Using AI for anything? No. I mean, I have little fun things that I do with, Grok, where, I ask it to, read me 50 Shades of Grey as if you were Mickey Mouse. And then I'll send that to a friend. Or like write me a love letter in the voice of Barack Obama. And then I'll send that to a friend. That's the only thing that I've been using AI for. Kite, how do you see trading for the next 10 years? Will bots and AI ruin the party? No. No, they won't. Not at all. I'm sure there's a lot of trading strategies that could be adapted to AI. you know, stuff that works off of indicator crosses and stuff like that. But I think like honest profit, like real profit, I think comes from smarter. It's not necessarily the trading strategy itself that's making you money. It's what you do with it, like how you like position yourself across the entire board. Do you have a spot portfolio for, you know, kind of if things go crazy to the upside and you don't have any positions at all? Do you have smaller time frame trades that are taking profits incrementally? Do you have hedge positions on like a medium time frame for like the best case scenario and kind of, you know, squeezing the most out of price action? That's stuff that I just don't see an AI being able to do. And as well as that, AI can only do what it's programmed to do, and people are going to want results. So they're going to tell it to do stupid stuff that is just going to not make them any money. And, you know, black box trading has been around for decades. And by black box, I mean a computer algorithm that is making microtransactions on the market that happen almost instantaneously because they are parked right outside of the New York Stock Exchange. And they make profit, but, you know, it is micro profit. And that's what people don't understand. These black box trading things, you know, you can call them AI. It's an algorithm that trades price action very quickly. But AI is the same exact thing. It's going to do what is asked of it. It's not super intelligence. It's not going to create something new. So the black box trading, the reason why it works is because it's very high win ratio, and they're using significantly low risk over a very long period of time. And they have multi-millions of dollars, 50, 100, $1 billion throwing at these things. So when it makes 0.0001% to the account, that's a significant amount of money to $1 billion. All right. Especially when you extrapolate that over the course of 10, 20, 30 years. All right. So if, you know, Johnny from down the street, sorry to throw you under the bus, Johnny, you know, opens up an AI trading portfolio that's essentially doing a similar thing to the black box. It won't be able to be ever as good as it, because the black boxes, like I said, are literally like they pay hundreds of thousands of dollars in rent every month just to have a location. I'm talking right outside of the New York Stock Exchange. That way the latency on their trades is as minimal as possible. That's how much it matters that they can afford to pay that just to have the box. You know, it's, you know, for all intents and purposes, we call it a box, but it's called black box because it's proprietary. It's no one can see inside of it, but we know it's there. You know, they talk about it. So I'm streaming right now. So if Johnny from down the street gets $20,000 in his account and he has this black box AI trading thing, well, if done correctly, it's going to make him literally fractions of a penny. And it's going to take a significant period of time for him to see any sort of results. And I'm talking about if we were to say we want to do this correctly to where the account would be at such minimal risk of losing everything that you could run it forever. But we all know human emotion won't let that happen. These AI trading strategies and websites and stuff like that I've taken a look at, none of them have something so proprietary that you can't touch the metrics. You can always adjust the grid. You can adjust how much money the AI is throwing at it. They're going to screw it up. So I don't think, until we have like artificial super intelligence that is able to think on its own and extrapolate data at such a high speed, I don't think that there's any reasonable hope for AI to outpace traders that know what they're doing. If you had to rebuild a crypto YouTube channel from scratch, morals aside, and maximize viewership, how would you build it? By the way, I also asked AI this. I would either leverage money. I'm talking about actually pulling out loans or getting third-party deals to trade with. That way I have a large amount of money on my screen, because nothing sucks people in than seeing, 100K in profit, and they go, that's, 3 times my salary for the year. If I could get to that level, then everything would be all right. So false sense of hope. I would either 1, sell a indicator, or 2, try to build some sort of parasocial relationship where they've inserted so much money that they need it to work. And that's kind of the thing that you ran into with Market Cipher. Market Cipher, I think they've changed their pricing scheme, but in the beginning it cost 0.1 Bitcoin, which at the time was $1,000 for me, but for someone else it could have been $1,400 or $2,000 or $3,000. So when an average person that works, a $40K a year salary job buys something that costs them $3,000, they need it to work, because there is no refund, and I wouldn't be giving a refund because, look at me, I can do it. So what's your problem? You paid me, and you paid in crypto. So who are you going to get your refund from? You can't charge back. So it builds a parasocial relationship where they rely on me for all of the information in order to get this indicator to work, that they keep coming back because they feel like they're missing something, because every time they tune into the stream, I always have $100,000 of profit on the screen. But what they don't know is that I'm bringing in, $500,000 every 6 months from people buying my indicator, and, ad revenue from the viewership that I'm getting, and partnership deals that I'm getting for signing people up to these predatory websites. So with that, I have plenty of money to throw at these things, and if I lose, so be it. I have so much money coming in on this side, what does it matter? All right. So that way they're stuck with me. I do hope that eventually they would wake up, but for the meantime, I'm taking all of their money. All right, I already got the 3K, and now I'm, making money off of ad viewership, and then I'll come out with, I forgot what he was charging at the time. I'm basing this off of a certain someone, but I'll sell a exclusive private section of my Discord, where you already paid for the indicator, so you get access to the Discord. But now there's a second level where if you want to have like real-time access, you're going to have to pay $500 a month, or an upfront fee for a lifetime membership of $1,500. So at that point, I have now sold you on an indicator. I'm making ad revenue based off of you trying to learn how to use the indicator. And then I'm also making extra money on top of it because you think there's another layer that you have to learn beyond that point. So rinse and repeat, I guess. And with all the money coming in, more and more people start showing up. Simple and easy. Now, I don't think everything about that is bad. I think there's ethical ways to go about it. David Tech is a good example of an ethical way to go about it. He doesn't charge you an arm and a leg for the use of his indicators. I think once you pay for the Discord membership, you get access to all the indicators that he's ever created. I'm not sure if that's how he still does it. That's just kind of what I can remember. As well as that, his indicators, you know, he's doing time and effort to kind of figure out what the profit and loss would be, the win ratio, all that kind of stuff. He's putting time and effort into that. He's manually creating these indicators, especially attempting to create manual indicators for even the hard stuff. You know, I think ABCs are incredibly hard to put into an indicator form, but yet, you know, he's found a way to at least attempt to. And, you know, his videos are quite fun to watch, and I do believe he's informative. So, you know, because of the price point and the amount of effort that he puts into it, I don't think he's doing anything wrong. If you take an indicator that was already created from someone, slightly tweak the settings that anybody could tweak, you know, kind of mash it all together, take away all the settings that created the customizability, so that no one can change the indicator, so that way you can claim that, you know, it's custom tweaked to make sure that it's the most accurate, and then you charge thousands of dollars, and then on top of that have, you know, a whale club where people pay another hundreds of dollars just to have the chance at following some of your trades. That's unethical to me. That's bad morals. Interview Richard Hart drunk could be an option. That too, you know, networking, bringing on all the scum of the earth, just to kind of get a chance of like a 10% viewership conversion, you know, that kind of stuff. Kite, your current long trade, what's the stop loss in that? It's 1%. I mentioned it earlier. So these are the current positions here. Can you chart BNB? See what we got going. So BNB had a fantastic macro ABC, kind of calling your bottom of the bear market. We had A. I should do it with this. We had A, B, C. All right, so that called your level of support that you need to hold above in order for the market to remain bullish. We ended up putting in a ABC here, calling for a retest to the downside. Price action came back up and retested it, still got rejected. We ended up falling back down to this level, went slightly below it, but for I keep saying intents and purposes, but for the most part, we held that support exactly as we should have. Beyond that point, on that downtrend, we had A to a B to a C. All right, so another level of support there. And from that, we pretty much just started charging to the upside. You know, once we broke through this main level here, there wasn't much left to do. Now that we're back to the upside, you know, this whole trend here, A, B, C. this is your bearish level at 642. Now, after we created that ABC and it worked out, during that period of time, we had an A to a B to a C. Your current bullish level is 456. So this one is pretty cut and dry. You have your short level, your long level, and to be honest, just from the daily time frame here, there is absolutely nothing to do on the medium time frame. Nothing. You know, the top of this B wave, all right, did have an ABC, albeit small, but still ended up working out all the same. But on BNB, there is nothing that I can, you know, call that makes any sense to you for you to enter. You know, if you entered pretty much at any point during this uptrend, it was kind of based on faith. All right. Your only real entry that you should be long from on BNB would be 456. That's it. All right. From an ABC perspective, if you're playing support and resistance on the smaller time frames, which is a dangerous game in itself because really the macros are all that matter, you know, you could be like, all right, we've broken through this resistance and we've confirmed it as support. So, you know, we probably should, you know, start heading back up here and hopefully start trying to retest, you know, 605. But that's about it. You know, when it comes down to the smaller time frame on BNB, there's not much. But from a macro perspective, BNB is pretty awesome. But micro perspective, not so much. Do you trade only after you see completed ABCs? Yes. If I get what you're asking. You know, let's say I'm trying to go long and price action is down here. All right. I don't attempt to go long at all until we get back above this level. Now, it's not like, you know, I'm waiting for us to get back above that level and then I'm like, all right, I'm looking for a long entry. I take my long as soon as we get back above that level. I'm talking like right there. All right. 1 cent above that line and I'm long. That's just how I do things. And then depending on the size of the structure, like let's say that this ABC is super macro. All right. Until we really retest some of the major highs within this trend, I'm assuming that long is going to play out for a great period of time. Doesn't mean that there can't be retests to the downside in between, but the majority of the trades, the longs are going to work out significantly better, and vice versa if this was a short trade. Hey Kite, can you explain how do you get your C target from any given ABC? It is only support and resistance and fibs? For the most part, yeah. So are you talking about how high do I think the C is going to go or how low? Like right here? All right. I don't attempt to target how large the C wave is going to be. If you're talking about, you know, how do I target the trade that would be corresponding off of that, if price action was to come back down, yes, you are correct in the fact that it is local highs and local lows, depending on if it's a short or a long. So, you know, in this case scenario, this gigantic ABC, all right, I'm pretty much, you know, I'm targeting these local highs here, unless a short position opens up like it has. Now on this trade, since it's a smaller ABC, I don't expect it to break the macro here, but I do expect it to retest the previous local lows, such as here, and, you know, at the most here, retest 53,575, because that's my super level. That's my super support. So that's how I kind of gauge where I would like to take my profit. Now, as I've said many times, there's multiple layers to this. So if you have a long position from 53,615 and you see an ABC such as this, on one account, you would simply have a hedge short open that would not be, all right, it is a money lock, all right, is what I call it. So if I'm up $700 on the long position from down here at 57,000 or 53,700, and I take an opposing short position that if we were to come back down to that level, I would be up, $750 on the short. It basically makes so that all of the time that I spent in this long position was not for nothing. People have a hard time understanding that because they go, well, then you made no money. No, I made $750. And I want to keep my $750. So if there's a sign in the market for a possible another retest of the downside, which we can't always guarantee that it's not going to stop, this definitely could have us push past 53,700. So on one account, the short trade would be opened up as a full hedge position that if things were to go completely wrong on the macro and we keep going down, past that point, we're looking for 49K or even 38K. All right. And then on another account, you're looking for short-term gains. You're looking to take profit, at 56,255. You're looking to take profit at 53,665. All right. That way, you're taking advantage of both sides of the puzzle. On the larger account where you use traditionally a little bit more risk, all right, you're making sure that the money that has been made is kept. And then on the smaller account where you're using less risk, that's where you're kind of trying to squeeze out a little bit of profit here and there based on the educated decision of right now we are macro bullish. So if we do have downside, it's probably just going to be a retest and we shouldn't expect a real good push to the downside. So you're going to be taking profit earlier, but still good profit, and then hopefully returning back down, back up to the upside. And then on the first account, the one where you're taking the hedge position, if we were to get stopped out of the original long, all right, you would be looking for a new long in order for it to confirm. That would be this position here. It would turn into an A to a B to a C. All right. If we happen to get back above 49,255, you would take a new long position. And the only time that you would get out of the short position is if we form an opposing short position. It starts getting crazy and layered on top of it, but it would look something like this. All right. Like that. All right. So you would take your profit on your short as soon as this one became an availability. And like I said, with the long way early in the stream, all right, as soon as this C gets above the A, I can close this short. All right, because if we come back down, well, I can open the new short. But if the C is above the A, it can always continue. So I should stop holding the short position. I'm wondering if you ever try to target the C. Hopefully I just explained that. I feel like that's what I was doing in the first place. But I'm never trying to target the C at all. I take my profit based off of what the market shows me. I don't tend to take my profit based off of arbitrary levels. I am testing something slightly different where, we have an A, on the smaller time frame here, we had an A to a B to a C, A to a B to a C. All right. So I took a long position from there. And then once the C got above the A, I closed the long position and opened up a new one. Because if the C is above the A, then there's the possibility for a continuation. But if that ends up failing, I'll be opening up the short trade on the opposing side for the retest of more than likely 56,000. 56,600. But I always have multiple accounts that there's a trade open on spot, because I'm more geared towards spot nowadays. But I am long from 53,595. So that, if things really don't work out on this medium time frame, everything is fine and dandy. What do I see for Ethereum? Ethereum on the medium time frame is pretty much in the same exact position as Bitcoin in terms of we have an A to a B to a C. All right. So if Ethereum comes back down below this price point, 2,788, that would be a confirmed short position, and we would be targeting 2,513 and 2,312. Those are our two local lows, and that's what price action would like to find its way. Now, you would hope that it would do something like this, and obviously that would be best case scenario, because then you can have a confirmed long position to re-hop in. Now, on the macro time frame, BTC did not confirm previous resistance as newfound support. All right, if we're looking at the, let's do to Ethereum exactly what we did to BTC. Let's look at the local lows of the uptrend. All right, so there we go. All right, these are the significant local lows of Ethereum right now. All right, so you can see when we're up here, when BTC was bearish, we didn't necessarily have any, I would say, macro warning signs on Ethereum. And that's why we kind of look at the market as a whole. All right, when we're going to go play an altcoin, we typically look at Bitcoin and see if Bitcoin is bullish. All right, and because a lot of these things are correlated, you can see warning signs in one that you might not see in another. So we did have an A to a B situation on Ethereum, which at that moment in time, all right, unless we already have one, we need to start expecting a retest of 2,779. And usually, unless there's something stopping it, we are going to use the next support or resistance as the opportunity for the end of the C. And in this case, it was the last local low of 2,170. And that's exactly where that C wave ended up. So right now, this is your macro setup for Ethereum. So if you missed the macro opportunity for Bitcoin, which was 63,500, you do have an opportunity to jump into Ethereum for a long-term trade. And that is 2,816. If we get back above that level, that is significantly bullish. BTC and Ethereum are both going to be in macro long positions inside of the post-halving scarcity squeeze, and that's very, very bullish. So at the moment, it doesn't look so good. All right, we are approaching a significant support which, now that we're below it, we assume that it's going to be new resistance. All right. Because that's, just traditionally as you approach it, it's resistance. If we can get back above it, it should be acting as new support. But we are approaching a previous support, which we can now assume is resistance, with a bearish ABC pattern, not currently confirmed, but it's damn close to, just like how BTC is. All right, and that's at 2,780. That's where the short position would be. So, if that happens to confirm, we're probably going back down to retest 2,500 to 2,300, and at most 2,170. And what we would hope to see is, if that happens, something like this. All right, and then that would become an A to a B. And we would hope that the C wave puts us back above this macro here. We get a nice push past. And then we have an A to a B to a C, reconfirming support, giving us an extra boost. And then continuation to retest the all-time high. Well, it wasn't the all-time high, but the all-time high of the trend. I need to go check on something. It sounded like someone just fell down the stairs. I will be right back. It's okay. My sister just tripped over one of the cats. It's fine. All is right in the world. Have you not tried to day trade using ABC on the 5-minute chart? If useful, if you combine it. It's useful if you combine it with daily bias and trend. I mean, we've done it in the past, but to me, it's more headache than it's worth. It's not something that I'm particularly interested in. I'm not saying that it can't work, especially if you have a good grasp on the macro and what's happening there in the medium time frame and what's happening there, and trying to figure out, what the general direction is going to be, and try to take trades that are only in that direction. But I don't want to spend that much time. It's just not for me. I rather have trades that once I'm in them, I can check it once a day and check the results and be happy with it. Make 50 R&R and doesn't sound like a bad deal to me. And I can go, work and do other things. I just don't want to be glued to the chart like I was. That's not interesting to me anymore. It's not a lifestyle that I feel is worth it. If you have millions of dollars and you can use 0.01% risk on a 5-minute time frame, and it's you treat it like a job. I'm talking mostly about the traders that are trading like market open, and it's like you're restricted and it's a limited period of time, just like how a workplace is. I could see how that would be cool, but it's a trap. On that market, you're restricted. You cannot trade past a certain time. Crypto is 24/7. And if you are trying to trade 5-minute time frame, you're trapped. You are going to be there all day, all night, in constant worry. And there's too many opportunities to lose money and be like, all right, let me make a quick trade real quick and try to make that money back. Oh shit, I just lost again. All right, let's try to make that money back. Like, there's too many opportunities to get yourself into trouble. On the medium to large time frames, you still make a significant amount of money, but there is a very small amount of opportunities to get yourself into trouble. And there's enough time between those opportunities to reevaluate and cool down and make a better decision next time. On the 5-minute chart, you're in the same mindset as you were 10 minutes ago. Nothing has changed. You're still going to make a bad decision. When I have an entire 2 weeks between different entries that, you know, I might have messed up a little bit on one, I have an entire 2 weeks to, you know, reevaluate, take myself back down to neutral, remind myself of what's important, make the better decision, make the money back, or, you know, whatever it might be, however you look at it, and continue to grow. The smaller time frames, like I said, just, you are human, and don't you ever forget that. All right. If you're playing in the stock market where you are restricted, that's a different story, because you have something outside of your control making you cool off. Even if it's only for a day, you know, that's still worth something. The market has definitely flatlined here. That's for certain. Let me see if it's just the CME. It's definitely flatlined. But yeah, because we don't have any major resistance on BTC right now, it gives me the feeling that this could go up a little bit more. But when we look at Ethereum being directly at the line of resistance, to me, tells me that these ABCs, these medium time frame ABCs, more than likely are going to confirm, and we're going to see some sort of result off of it. And most people will not like that, because they feel like they've been stuck here for forever. You know, just taking a look at some of the other coins I have on this list here. If we're looking at Cardano, we had an A to a B to a C, and so far it has worked out pretty damn perfectly. You know, we tried to hold this level here, which was the previous local low in this trend. And you can see how we tried to hold it here, here, here. Eventually broke through, came back up to retest, got rejected, went down even lower. So right now, you know, it might even want to try to make its way down to 24 cents. But on the smaller time frame, I mean, not small, not at all. We do have an A to a B to a C position. So there is some hope for Cardano. It would want to come back up and retest 44 cents. But if we get rejected at 44 cents again, then it definitely starts to become a likelihood of seeing this lower level here. Yeah, like on the macro time frame, we had an ABC long at 24 cents. And I mean, that wasn't too bad of a return up at that top. You had an ABC calling the bottom. You had an ABC calling the top. Between those 2 points was 185%, which is not too shabby. Not too shabby at all. KDA, we've talked about it yesterday. A to a B to a C on the macro time frame. Price action needs to stay above 41 cents in order for me to remain bullish on KDA. We had an A to a B to a C top calling for downwards price action at $1.67. All right, so at this current moment in time, that's our range. Once we get back above $1.67, we'll start trying to retest $2.44, $10, and then, 16, and then 28. XMR, in the past I've tried to trade XMR. It's not something that I would probably actively trade at all, because just look at this chart. Yes, we can see ABCs, but it's so jagged and all over the place. That there's little hope for it, to be honest. And the main reason is because XMR is a currency. We like to call all cryptos cryptocurrencies, but XMR is the only legitimate currency at the moment in time. Bitcoin, it's used in various transactions, and those usually become headlines. But XMR is actually used to buy something that costs $20. So there's constant buying and selling from the people that are using it, which causes the price to look like this. Bitcoin, not so much. But hold on, let me go back real quick. Did we put in that higher high? We did. So currently XMR is in an A to a B to a C. That is confirmed. So XMR is currently in a short position. ICP. Okay, I'll take a look at it. Let's see. ICP, downtrend. We did hit a A to a B to a C, which gave you a long position of $3.35. We ended up putting up an A to a B to a C here, which gave you a short position, macro-wise, of $16.79. Between those two positions was just under 400%. Very nice. In terms of anything on the smaller time frames telling you to re-enter a long or move your position up, I don't see that at this moment in time. At least not something that we would like to take a position on. We do have an A to a B to a C here, which, I guess could be used. It's definitely going to be a battleground region. And the reason why I say that is because you have, if you get back above that level, you are bullish from the trend perspective. But then you also have an A to a B to a C that would happen there, where if you get back below this, you're bearish. So it's going to be a teeter-totter region where it's going to fight for control and then eventually break to the upside. So that's kind of going to be an awkward thing. Hopefully it resolves quickly, but that is something that I can foresee happening in that region, just because of the way that this market structure has kind of lined itself up. Is ICP tradable on I haven't really looked at all the coins that are tradable on LBank. ICP is tradable on LBank. I asked them to put KDA on LBank, and they have not yet, and that's really unfortunate. I would like to make a couple trades on that, but they stinky. Stinky. Uh-oh. Hopefully someday in the future. I'm actually gonna text my LBank contact real quick, and just pass along again. I'm always forgetting to drink water. All right, guys. I think we're gonna go ahead and start heading off for today. I think we've been live for quite a bit of period of time. I only wanted to hop on for like 45 minutes to an hour today, but apparently already we have been live for an hour and 40 minutes. So if you guys ask good questions, and put me on a tangent, that's the key to get me to sit here for multiple hours. So if anybody has any more questions, don't be afraid to put them in the chat real quick before I leave. I'm gonna go ahead and do Wordle real quick, just to keep our brain active. Okay, so we have an I, an E, and a T. An I, an E, and a T. I don't even think those were words, but let me try to get some other letters knocked out here. Okay, so we know the I goes there. Man, this I'm kind of missing this one. Hi, buddy. Okay, so I mean that gives me okay. So we have blank ILET. Fillet? Cool. I thought we were gonna fail. Actually, it wasn't that hard. I thought it was gonna be a harder word. I guess I shouldn't expect it to be. Do you like using RSI or EMA, or strictly ABC? For all of my entries, it's strictly ABC. And the only time that I ever use RSI is if I'm just like it's just if I'm curious whether or not there's a divergence. So like on BTC for example, if we cut down the time from here so we can see this, and I like to average my RSI out extremely, so like a 125. That way, if there's a divergence, it's something that is significant. And so far, there's no divergence off of the A to the C. So, like if we're using the indicator as a deduction, we can assume that if there is a downside retest, it's not going to be severe. But that doesn't really gauge how I make my moves or how I take profit or anything. It's just out of pure curiosity on how severe a reaction. So, for example, this high here to this high here. So this A to this C had a divergence on the 125 RSI. So if you see a divergence on the 125 RSI, it's probably going to have a pretty significant reaction or a pretty significant effect on price. And of course we saw that. Over here, we had an A to a B to a C, the top of the A, the top of the B, or the bottom of the B. And right here we had A, B, and C. Okay. So those are the two corresponding points there. Severe bullish divergence, bearish divergence. So the reaction from price was severe. Over here, we started putting in bearish divergence at the top of this level here, and price followed. Off of this ABC here, we did not have a divergence. So it's just something that I look at out of curiosity to see if there's a divergence. In no way, shape, or form do I use it to base my trading strategy. It's simply a a curiosity killed the cat type ordeal. Said ton dipping? I've never looked at ton. Wow. It definitely is. So ton had an A to a B to a C. So if you were below this level, you were bearish on ton. And, you know, we ended up kind of messing around that level for a little bit, but we came back up to retest and we failed the retest. So it dumped off a cliff here. This is on a 1 hour time frame, so it's not anything crazy, but let's go ahead and look at a larger time frame for ton. So ton has very little. I mean, it has some decent local lows here. So we have a local low at $3.33. We have a local low here at $4.58. And then I'm not going to count that one, but you know, we'll kind of count the average here just to kind of make it even Steven. And then $2. So we use that as our kind of baseline here. So ton had an A to a B to a C, which ended up working out. And then right now, ton only has an A to a B, so we can assume that it wants to try to retest the A, especially with the bearish pattern here. So that could be a possibility coming up. But considering all the other factors like Bitcoin and Ethereum, you know, this is an altcoin, so it could have a more severe dump. But this might not be the most likely option for the structure to take. But considering the fact that it's an altcoin, you know, it could have a pretty severe dump, you know, all the way down to $3.33. And then you would have this ABC structure as your new guiding light for what's bullish in that market. And for the leverage portfolio, the small one that I'm working on, I am going to open up a short position on Ethereum right now. Let me throw in my stop loss. Okay. And let me show you why I did that. So I kind of just weighed my options here. BTC and Ethereum are in very similar positions, pretty much identical almost. But the difference is that Bitcoin returning back down to its local low here. You okay? Would be 10%. Whereas with Ethereum, for its retest, not only is the local low a lot farther, the two local lows that are involved with Ethereum, the first targeted level would be the same as Bitcoin, but then the longer level would be about 18%. With Bitcoin, the secondary level is just below that. So, I mean, even at the maximum here, it would be 14%. But, you know, if we're just going to go slightly below that B, then, you know, an extra 1 to 2%. And Ethereum is pretty, you know, at this point in time, it has confirmed. You know, on the smaller time frame, we had a little tiny A to a B to a C, but more importantly, the larger structure here, A to a B to a C. Let me actually go throw that into the Discord real quick. Like I said, I don't hide behind the Discord. I am always here to answer legitimately and show you what I want to do. I still have the long open, but so I'll probably aim to take profit between these two. So more than likely 2,400 if we see it. All right. I have both positions open. All right, there we go. I'm happy with how this is all working out. So I'm gonna go ahead and who's Darav? He's the founder of Telegram? Darav, founder of Telegram, has been arrested and charged with aiding terrorism, drug trafficking, fraud, money laundering. He's facing an international warrant for refusing to cooperate with authorities. There's two perspectives to this, you know, and I guess that's the problem with different countries and different laws surrounding privacy. But if he's taking the stance of, I'm not just going to allow you to freely because it's a stepping thing. It's if you give them access to one, well then what's the limit? You know, they just slap a label on somebody, and then that way they can get into your accounts and look at everything they ever done. If he's trying to take the stance of, I'm not going to let you just abuse our users and just, you know, look at all the chat logs or whatever, because that should be private, then I support him. But you can also turn around and say, well, if he's not helping get rid of terrorists, then he is a terrorist. But at the same time, like, the dude created an app. All right. I don't think he's morally responsible. You know, I think the intelligence agencies are. And I'm sure there is a billion other things that they can do to prove that someone is a terrorist than their goddamn Telegram chats. Obviously, this I have no clue about anything revolving around this. I just read a single tweet. That's my opinion based off that single tweet, and what I can deduct from the situation. But yeah, I mean, it's one of those things where it's, you know, if you let it happen once, then it continues to happen. You know, it's the whole Snowden situation where he was basically saying, like, you know, NSA during 9/11 got access to all this stuff. Do you think they're ever going to give you that back? No. Love to know your thoughts on FET. So from an ABC perspective, this is your macro entry, which we already have surpassed it, but with BTC and Ethereum looking like they want to go back down to the downside, you actually would have an opportunity to enter again here. Obviously with altcoins, I wouldn't mess around with leverage on this, and if you do, you probably would use a higher stop loss. But yeah, I mean, that looks decent. You know, we didn't quite test the macro local low here. We don't necessarily have to. I'm just saying. You're left with two options. Either one, if price action holds above $1, you're bullish. But if we go back below it, you would want to see this extend itself a little bit down to here. And then your new bullish position would be 70 cents. Is this ABC strat going to make you a millionaire? Absolutely. I've been a millionaire once, and I squandered it just through stupid actions, trying to over leverage myself. And I mean, this was before ABC's. Like, I had like a concrete motion that I like to take, but you know, I have big plans. And I do think that ABCs allow you to beat the market significantly. And given time and compounding, there's nothing that you can't do. All right. Wait, let me read these last couple questions. Kool-Aid, Kite, haven't seen you in so long. Glad to see you back. Yeah, who knows? I could be gone again for months tomorrow. It's just kind of based on how I feel. So you think this is a liquidity sweep on ETH and it's going to come down after it just took out stops? Yeah, I mean, that's kind of what ABCs are. It's essentially a liquidity sweep. But to me, I don't view it in like that technical sense. I just view it as psychology. You know, I don't view it like, you know, people, there's a comment that made fun of me for saying this, but I don't believe that there's manipulation. And the manipulation that's actually happening is, of course, there's people that can, knock a domino into place, but they don't have the manipulation inspires the feeling of there is someone in full control of every single up and down, and that if it goes against me, it was manipulation. Blah 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 blah. Like I said, there's people that have enough money to push a domino, and whether or not that domino continues for a long time or has a short fuse is a different story. So when I look at what you would call a liquidity sweep, I don't view that as, like some big guy trying to knock out all the stops before he shoves it back down. I view that as simple human psychology. All right, the party's going on, the party starts to die down, and there's always people that want the party to keep going. So they're testing their limits, but then eventually the party has to stop. And that's what an ABC is to me. It's human psychology of trying to push the limit, but because you tried to push the limit, there's an equal and opposite reaction to the downside or to the upside. That's all it is to me. Right. I could talk for hours. No kidding. I'm so sorry. But yeah, I might be back tomorrow. Who knows? Just depends on, when I kind of get done with work and how I feel. And I was rewatching the stream the other day, when we did the compounding calculator, where I explained even if you're doing what would be considered quite well in the market, like let's say you got a portfolio of $200,000, $300,000, why it does not make sense for you to quit your job. You can reduce your hours for sure, but let's say it costs you $30,000 a year to maintain your lifestyle. If you work, part-time and you make that $30K, your monthly contribution would be like 2,500-ish, like 2,550. So instead of taking the money out of your portfolio to pay for your expenses, you keep a part-time job in order to make sure you don't have to withdraw that money from your portfolio. So regardless of how you're doing, like I said, in order to be like a full-time trader, like you don't have to go to work anymore, you need a significant amount of money. Now, if you're old enough where like the compounding isn't going to really like do you anything, like if you're 55 years old, and you have $1 million, if you're making 20% on that per year, that's $200K. You can withdraw 100,000 of that. The other $100,000 helps compound a little bit, but for the most part, you're kind of set. If you live until you're 75, 80, and you're continuing to do what you're doing, you're going to be fine. But if you're in your 20s and you're starting trading, and let's say that you did get lucky, and for whatever reason you have $200,000, $300,000 in your portfolio, and you're making 20% on that per year or whatever. So $200,000, 20%, that'd be $40K. Instead of withdrawing that to pay for your expenses, keep a part-time job that makes 30, 40, 50K a year. And let's say that you're keeping this pace for the next 40 years. If you're 25, 26 and you want to retire around 65, all right, and you're making 20% on it per year, by holding that job, I'm sure these numbers aren't exactly right here, but even on the low end of this, all right, you're missing out on so much freaking money because you refuse to just put in extra effort. All right, if you're withdrawing that from your account per year, you're missing out on so much compounding interest. It's ridiculous. All right. So even if we took out the monthly contribution of an additional $30K per year for 40 years, all right, that's still $44 million. That you're missing out on because you want to be a big shot. So I don't know. What's more worth it to you? I guess it's not that can't be done. You know, I would say you would probably have to be closer to the $600,000 mark for me to like agree with you that you can probably go full time if you're willing to sacrifice that future of like money that would last your family generations. But if you're only looking out for yourself, if you're like, I don't want kids, screw that, you know, and I just want to have an easy life, I would say once you have about $600,000, you know, you would need a really good emergency fund beyond that point, because you're still not to that point where like everything is set in stone. But if you made 20% in a year off of $600,000, you know, that's 120K. And even if you cut that in half, that would be 60,000. You know, if you're, a married couple and you don't have kids, 60,000, I feel like you can make that swing, as long as you have your debt under control and all that kind of stuff. And then the other 60K can go towards compounding interest. But anything below that, it starts getting iffier and iffier and iffier. You know, if you only have 200K and you make 20% on that per year, that's 40K. Even if you were to pull out all of that, you're still kind of, you're in a situation that could be risky. You would have to be a single dude that has a good budget and no debt in order for 40K a year to, I would say, like, make you happy or you feel secure. What do you think about the 88 chart at the moment? We took a look at it earlier. On the small time frames, there's absolutely nothing to make a decision off of. But on the larger time frames, there's some good ABCs that kind of give you an opinion. So we have a long entry from 31 cents and then a short entry from 68 cents. Beyond that point, there's nothing on the smaller time frames that gives me any sort of clue on, you know, something to enter upon. So you're saying don't spend, fast for breakfast. Well, fasting for breakfast is good for you in the first place. I feel like most people should be doing that, especially in America. No restaurants, no girl for 40 years. Wait to live till you retire. Got it. That's not what I'm saying at all. I'm saying, I don't know if you're being negative with that comment, but I don't know if I struck a chord with you where, you know, you kind of want to screw off and never work a day job again or whatever. There is other ways to bring in an income than work directly underneath a boss. All right, you can find something. But what I'm saying is that even with $400,000 in your trading portfolio, all right, if we're taking the market average of 10% per year, and we're saying that with our trades we're able to hit 20%, all right, I'm just trying to be conservative here. Of course, can you hit 30% in a year, 40% in a year? Yeah, you can do that. All right, but with $400,000 at 20%, all right, that's 80K. Let's say that you want to be able to make more money to afford the things that you think will make you happy. Faster cars, nicer house, big boat, whatever it might be. you're going to need money to do that. So of course you can go liquidate your entire trading portfolio and go put a hefty down payment on a house or whatever you want to do. That's up to you, I guess. Live your life, live life, I guess. But if we want to get to the point where we can afford those things and still be secure with an income, you're going to need a lot more money than that, because you're going to have to compound the portfolio. The portfolio doesn't grow magically. It's done through compounding. So you're going to have to stick, 40,000 of that 80K profit back into the trading portfolio. So that's what I was saying before. With $600,000, 20% would be 120K. All right. So you have $60,000, which is a more than reasonable income to support, a small family, as long as you don't have, crazy debt and stuff like that. That's eating away at that $6,000, 60 grand per year. If you have no debt, besides like stuff that makes sense. All right. But there, you can go read Dave Ramsey or whatever. And do I agree with all his practices? No. All right. If it makes sense mathematically, sometimes debt does make sense, but people are stupid and they get themselves into situations. If you're single and you have 40K per year, you can make that work. If you have no debt, you can still go out to restaurants. You have plenty to budget with. All right. You have, let's see, what is that, like 3,500 per month or something like that? Like 3,800, I don't know, somewhere around there. So $3,800 a month with no debt. If you're spending $1,500 a month on rent or mortgage, all right, there you go. Let's say that you own your car. You don't have to worry about that. Insurance, $200. It's expensive to live, even with no debt. But 40K, you can still swing it, and you can probably have around $1,000 a month of like free money, where you can kind of spend it how you like, whether that's restaurants, movies, go-kart racing, whatever you like to do with your life. But, if you're trying to buy a Porsche or whatever, 40K a year isn't going to do it. So that's why we need a larger portfolio. So if you put in the extra effort and work part-time, I'm not saying work full-time, 80 hours a week, never see your family or friends. If you just work part-time 20 hours a week, bring in, 20 to 30K a year, that extra money that you're not pulling out of your portfolio, I just showed you, even on the low end, is millions of dollars. Millions of dollars. So that's if you get to 65. Now, I mean, we can go back and do that and say 20 years, when you're 45, 50, when you still got some gas in the tank. All right. Say 30K. Let's say you're 25, 26. So about 25 years, estimated rate, 20%, and calculate. All right. That's still $2.8 million. All right. And like I said, if you are going to go about your life saying, I don't want children, I don't want like a lineage, then yeah, once you get to that 600,000, 800,000, $1 million mark, past that point, pull out what you want, from the profit. But if you do plan on having a family, if you have, or if you want to be generous and leave money to extended family, by the time this is all said and done, if you put in the extra effort, you've made millions upon millions extra that you can help everybody out in your life with. Because at the end of this road, you will be dead. You will not be able to spend that money anymore. So why not do some good with it? Or, like I said, you can take the alternative route and go, I'm going to be dead. Who cares? They can figure their own stuff out, just like how I did. To me, that's not a good option. But yeah, when I read your message, it kind of came off in a negative way towards the end, where you're like implying that I'm telling you to sacrifice all of your happiness until you're 65 and all that stuff. I get it. You know, everybody wants to be a multi-millionaire and by next year, and they don't want to ever work again, all that kind of stuff. But that's just not the reality of it for 99.9% of people. And just by simple math, if we do things correctly, we can exceed expectations substantially versus other people and retire even earlier. But we will come out with a lot more money. What is your opinion on the classical stock market? I think it's fine. If you're trading on spot, it can be a bit boring because the percentage moves aren't anything special. But in terms of market structure, the ABCs are there. And I mean, if you're able to trade individual stocks, you can kind of beat the market that way. But if you're talking about like just kind of investing in like an indice, then you know, I don't think there's anything wrong with that. Like, there's plenty of people that are never going to come around to the idea of trading in a slow, methodical way. So whenever someone thinks of day trading or trading in general, they're thinking hyper time frame, you know, losing tons of money. But if you approach it from a medium to macro perspective, it changes entirely, and things are a lot more consistent. And to go on your question a little bit further, Nino, I'm not saying that you have to hold a part-time job for the next 40 years. I'm not saying that. But like the next 10, 15 years, like when you're young and you got nothing else going on, working 20 hours a week isn't going to freaking kill you, dude. And one, if you have the trading on the side and you're doing that, the part-time job doesn't feel like... The reason why people hate jobs is because everything else is messed up. They owe a car payment, they owe rent, they owe insurance, they owe utilities. So they're working, and they have nothing to show for it at the end. If you're working a part-time job knowing that that's making you so much extra money, it's ridiculous, it changes your perspective on what you're doing. And when you show up for work, you treat it for what it is. Millions of dollars. It could be freaking McDonald's, for Christ's sake. And that, you working there, it like 100x's your hourly rate if you think about it like that. So yeah, you might only be making $15 an hour, but that $15 an hour that you're allowing your portfolio to compound is making you so much money on the back end 15 years, 20 years down the line. Every single hour that you worked back then was now worth $400 an hour, even though it was McDonald's. And people just don't think about it like that. So therefore they get caught in this negative mindset of, I work at a shit job, I have a shit boss, you know, I hate this, I hate my life. But once you start getting this stuff figured out, it's totally different. Yeah, I mean, if you get a big boy job, yeah, you're getting health benefits, stuff like that, that's a huge advantage. That's a good point. All right, I gotta go. We were at We're at 2 hours and 30 minutes. All right. I'm cutting it there. I might see you guys tomorrow. I might not. I appreciate everybody that showed up today. Like I said, we should be expecting a little bit of downside most likely, but not anything too rough over the next week or so. And I do think that like within the next 2 months, I think we will start to be on the uptrend. And I think we'll be in the midst of that bull market that we so love and hold dear. So, all right, guys. Love you. Good talks. And I'll see you guys again soon. All right. Let me go ahead and select the song for the outro today. And then we'll do the thing and be on our way. So what's a good one? I haven't played this this song in a while. I like this one. Good night, Lazar. Appreciate it, buddy. When was the last time you looked at the dash chart? We'll have to talk about that next time. I can't get caught up again. I can't. It's a trap. It's a trap. Wilhelm, thank you, man. I appreciate you being here. And hopefully I'll see you again in the next one. All right, guys. Let's go ahead and do the thing. And head off for today. Bye!
Maybe they were wrong about me, and I was right the whole time. Underrated newcomer sitting on a gold mine. Never took a shortcut, I've been on that slow grind. Add up all the baby steps, I'll be there in no time. Folks line up and down the block to see the spectacle. You don't gotta like, at least admit the shit respectable. Never had dollars, we were fighting over decimals. Decimated all the doubt, now I'm feeling resolute. Now I'm feeling purposeful, working till mama's purse is full. Been rock bottom, only way to go is vertical. I was off balance, yeah, I was catching vertigo. Now they breaking vertebrae, every time I circle through. I prefer to do everything how I imagined it. Made this off a handout so they can put their hands in it. Break it and dismantle it and play me like a mandolin. Wait until I'm down till they offer me companionship. Saying they gon' ride for me when shit hits the fan again. They ain't really crazy, they as manic as a mannequin. Can it, man, I cannot stand hearing any more of this. I guess the moral is just maybe they were wrong. I'ma go until I get it, I'ma chase it till it's gone. Head in the clouds and my feet on the ground, screaming down at them like, look at me now. Just maybe they were wrong. Just maybe they were wrong. Don't be fooled by the frown on my face, I'm just playing along. Just maybe. Just maybe.